warahmatullahi wabarakatuh. So we have listened to the head and shoulder, lower top, and so on. Now I will explain to you the chart pattern of triangle, wedges, and flex and pennant. Okay, firstly, we look at the triangle chart shape. The triangle chart shape is a common shape in a stock price. And it shows the current condition of the prices and what condition may come in the future. A triangle also shows a decrease in volatility, which could eventually expand again. This provides analytical insight into the current condition and what type of condition may come. And the triangle pattern also provides trading opportunities, both as it is forming and once it completes. And it has three types of shapes. Firstly, it's a symmetrical triangle. You can see the shape of symmetrical triangle, whereby the prices of the stock will rise not as high as the last rise, and it will drop not as low as the last drop. And then traders will wait until the third movement of the price before they draw the trend lines, which is a symmetrical triangle. And then the symmetrical triangle can be characterized as areas of indecision, and the market pauses and the future direction is questioned. Typically, the forces of supply and demand at that moment are considered nearly equal. Next is the ascending triangle. We can see it is different from symmetrical triangle because it has a horizontal line on the up of the trend lines, and so that they can shape ascendingly. And it is commonly seen as in an uptrend market, and it is considered bullish. Ascending triangles are considered bullish and are most reliable when found in an uptrend. And ascending triangle, the market becomes overbought and prices are turned back. The horizontal line represents a large sell order that been placed at this level and takes weeks or months to execute, and that will prevent the price to rise further, and that is what makes the horizontal line. And the reaction lows continue to rise and higher lows, and that indicates the increased buying pressure and gives the ascending triangle its bullish biasness. And next, the descending triangle, and this time the horizontal line will stay at the downwards of the prices, and it is considered to be bearish and is usually found in downtrends. Prices drop to a point where they are oversold. Tentative buying comes in at the lows and prices perks up, and the higher prices, however, attracts more sellers and prices retest the old lows. The horizontal line represents a large buy order that been placed at this level and takes weeks or months to execute, and thus prevent the price to decline further. And the reaction high continue to decline, and that indicates the increased selling pressure and gives the descending triangle its bearish biasness. And next, we look at the wedges chart shape. And we have a falling wedges and a rising wedges, whereby the falling wedges is considered as bullish and the rising wedges is considered as bearish. Wedges is similar to symmetrical triangles, but it has converging trend lines that comes together at an apex. However, wedges are distinguished by a slant. Either to the upside down or downside. And the falling wedges is bullish pattern that begins wide at the top and contracts as prices move lower. This price action forms a cone that slopes down as the reaction high and reaction lows converge. And the rising wedge is a bearish pattern that begins wide at the bottom and contracts as prices move higher and the trading range narrows. And wedges are also designed to spot a decrease in downside momentum and potential of trend reversal. And lastly, we look at the flags and pennants. There is bullish flag, whereby if the prices goes up, the flag will shape as downwards, and if the prices go down, the flag will go upwards. And then the pennants, which is also a lot similar like a symmetrical triangle but smaller in its volatility. And flags and pennant is categorized as continuation patterns, and they represent a brief pauses in a dynamic market. They are typically seen after a big, quick move, and the market usually takes off again in the same direction. Bullish flags are characterized as lower tops and lower bottoms, with the pattern slanting against the trend, but unlike wedges, their trend lines run parallel. And bearish flags are comprised of higher tops and higher bottom. Bear flags also have a tendency to a slope against the trend, and their trend line runs parallel as well. Pennant looks similar to symmetrical triangle, but they are smaller in size, which is their volatility and duration. And my conclusion is investor will analyze these types of trend lines before they make any trading in order to not incur any losses. In order to know the trend of the market, investor will try to understand the movement of the market and ensure that the movement of prices give them the gain or profit, which is the main objective of the investor. Thank you.
Thank you, clear.